I know you were just listening into that interview with the Qatari energy minister. He said oil sub 70 USD is bad for business and investment. We're below that right now. Your reaction?
My reaction is, Dan, and great to be with you. I know a few oil companies, shale CEOs in Texas, Louisiana, who would strongly agree with the minister, service companies as well. I think they would agree wholeheartedly the industry to be sustainable, even forget about drill, baby, drill, but to avoid dropping rigs, to risk a production slowdown. You need $70, $80. And as you noted, we're below that. And some of President Trump's advisors, such as Peter Navarro, have said they want to see $50 a barrel oil to knock inflation down by 1%. So again, I was nodding as I was hearing the minister. I know a lot of folks in Texas would wholeheartedly agree.
So President Trump is prioritizing lower prices, even at shale's expense. Bob, how sustainable is that strategy economically and politically moving forward?
You know, the president has a tough call to make, and he has decided that whipping inflation takes precedence over getting lower 48 crude production up as fast as possible. And that's a call he has to make. Also, lower oil prices are needed to help pressure Iran and Russia. So it's hard to overstate how much importance in the near term the president is putting on lower oil prices. And, you know, I used to work for President Bush. He used to have an expression, take one for the flag. Unfortunately, the oil industry in the United States in the near term is going to have to take one for the flag and probably absorb lower prices. Now, the president is preparing a banquet after this, right? He's going to lease more. He's wiping away regulatory risk. He's not Kamala Harris, who would have made life a lot more difficult for oil and gas companies. So the administration, I think, is saying, look, near term, you got to help on inflation here. We need to get Iran and Russia solved. And after that, you know, it's a different story and things will improve. The industry will be leaner and meaner and so forth. But in the near term, I think the priority is lower oil prices.
Bob, you got to wonder, though, what is the pain threshold here? At what point that prices fall, at what level do prices need to be is the better way to phrase the question. At what level do prices need to be in order for the administration to prompt a reversal of policy here? Because clearly 50 USD oil is going to be unsustainable inside the shale patch, right?
Yeah. Well, and Dan, you'll remember this well. We have evidence for this. In the second quarter of 2020, when COVID hit, we lost 25% of world demand overnight. And then OPEC Plus got into a price war. The price of oil collapsed, and President Trump really didn't protest until shale oil started shutting in, until prices of oil fell below operating break-evens, not new well break-evens. New well break-evens, $50 or $60 a barrel. I don't think the president's going to protest if we start laying down rigs, which we are, if that picks up. Where I think he will pick up the phone and say, wait a minute, is if crude prices tumble through 30, as they did in the second quarter of 2020, and you start to see shale oil wells shut in. And then you had the Texas Railroad Commission having a hearing and considering quotas for the first time since 1972. So you had strange things going on where you had American President Trump, begging OPEC back then, Saudi Arabia and Russia, to cut production and stop the fall of crude. So I think not until the 20s, Dan, would we see protests. Between here and $30 a barrel, if it goes that low, I think the president would like to see the inflation win, the lower prices for consumers.